Minister Straughn, Director of Finance and Planning, Mr. Ian Carrington, the Chief Executive Officer of Resolution Life, Ms. Senhouse, and Chairman of Resolution Life, Tony Hoyos, distinguished ladies and gentlemen, thank you very much for coming and joining us this evening for this important session. Indeed, the last time I saw this many people in one place in this particular at this particular venue was when there was a clash years ago between Battleground and Untouchables. So I suppose what I should do right now is to thank God for bringing you safely to the venue this afternoon, and thank the Barbados Secondary Teachers Union for having the children off the street this afternoon as well, so that you could get here on time, and most of you have been. We know that for you this has been quite a roller coaster journey over the years, and therefore this session is really about trying as best as possible to leave you with a greater sense of certainty. We are here, and especially this panel, to answer your specific questions about the liquidation of Resolution Life. There are some ground rules this evening. Given the fact that there are so many of you, you would appreciate that when it comes to questions and answers, we want to restrict the contributions to questions and answers rather than statements and positions. So as much as possible, stick to that and be guided by the moderator, who in this instance, I am the moderator.
And you are, sir?
I am David Ellis. Good evening. Thank you for reminding me who I am. I forgot. And most of all, I'd like you to work with us to ensure that this is an orderly and respectful session. The order is there will be the official opening by the minister in the Ministry of Finance, and then I will lead off the question and answer with the basic questions, some of those things that basically most of you would ask anyway, so we get those out of the way. The harder questions will come from you, I'm sure. This session is being streamed via Facebook, and online viewers can WhatsApp us through this number, 538-8088, 538-8088. So, at this stage, let us hear from Minister in the Ministry of Finance, the Honorable Ryan Straughn. He is an experienced economist, having served in that capacity at the Central Bank of Barbados. He holds a master's degree in economics, is also a former president of the Barbados Economic Society, and has held this very important portfolio of Minister in the Ministry of Finance for almost 1 year. Ladies and gentlemen, Minister in the Ministry of Finance, the Honorable Ryan Straughn.
Good evening. Can you hear me? Good evening. Not much better. Thank you very much, David, for your kind words of introduction. And let me just state on behalf of the government of Barbados that the process that has led us to this point has been rather unfortunate and certainly has had a negative impact on those of you in this room and those who may be watching online. And as we have sought to bring not just this matter, but certainly to restore the economic stability of this country, this government absolutely believes that the resolution of this matter, as it relates to CLICO and by extension Resolution Life, is critical to making sure that yourselves and your families can move forward and plan your future with a little more certainty. And so I just want to give you a little background with respect to how we've gotten here recently, and hope that as we go through this evening that you will leave here comforted by the fact that we have set in a process that will get you some relief after 10 years of uncertainty. The reality is that CLICO as a company was insolvent. And we have had to come to this situation this evening simply because the previous administration had issued some bonds to cover the gap or the hole, if you like, within the balance sheet or the financials of the company. As you are well aware, the government of Barbados, we have had to restructure our total debt. And so therefore, if you think of CLICO before it became Resolution Life as insolvent, and the government itself being insolvent, then you can't have two insolvent entities to create something that is solvent. And what that has meant is we have had, with respect to the debt restructuring, to take a long, hard look at what is the true exposure to the taxpayer in trying to bring a resolution to what essentially is a private transaction, private sector activity. And rather than, for most of you in this room, the $600 million in debt that was issued by the previous administration to Resolution Life, presumably to make the entity solvent, really meant that your children and grandchildren would have been paying that debt in the future in order to make sure that you got monies today. And so, in the context of where the economy was when we took over last May, we had to make some very, very tough decisions about how we were going to get ourselves, in terms of Barbados, out of this situation. And then to the extent that CLICO/Resolution Life fits into that, it really would have been unfair to the taxpayers of Barbados to be exposed for the resolution of a private transaction. And it is on that basis that we determine that and given that the business as currently structured, that no new business was being written that could see potentially a future with respect to the company moving forward, and demands being made to the government with respect to financing, then we felt that the orderly wind-up of Resolution Life and what the Prime Minister would have announced in the budget in March would have been the best way to bring to some conclusion and to give some relief to those of you in this room and those who would have been impacted by the failure of CLICO, to bring this to resolution as quickly as possible. Now, insurance is a complicated set of products that are offered in the market, and typically insurance is only paid on some event. For most of you, you would have bought either some kind of life insurance policy or variant, which meant that your beneficiaries or the beneficiaries that you would have named would have received the benefit upon your passing. And so what we are seeking to do here throughout this process is essentially deviate from the norm, in a sense, in terms of who the beneficiaries will typically be. And this process is designed to make sure that, as far as possible, that the monies that you would have paid into the various plans that you would have had, that subject to the support that government can provide from a macroeconomic standpoint, that the taxpayer isn't overly exposed. I'm not going to get too detailed into all of the differences between the value of the assets and the liabilities, but I want you to appreciate that where we have landed, we believe is the fairest approach that will give each and every one of you who are policyholders of some form with respect to CLICO/Resolution Life the ability to move forward with some confidence. And so that is the general background from a government perspective, because to ask the taxpayers of Barbados, of which many of you are, as well as your children and your grandchildren, to be responsible for the solution of a private transaction is not quite right, but needless to say, the burden would have fallen on your children and your grandchildren with respect to being able to settle that $600 million that were issued in debt just 2 years ago. And so these set of solutions that we've crafted, and I think the staff of Resolution Life, given the direction from the Ministry of Finance with respect to being able to wind up this company, there are some issues that we still have to work through. But this evening, it is our intention to give you absolute clarity with respect to the process. As you are well aware, this has not been a straightforward process by any stretch of the imagination. But I believe that what we have put together here this evening will give you, once you follow the process, give you the clarity with respect to how your situation will be resolved out of this matter. And all I can do is apologize to all of you for the length of time that it's taken for this, for all of us to arrive at this situation. And I would hope that you would use this experience, and the whole of Barbados will use this experience to make sure that you hold not just government, but certainly entities where you place your monies, you hold them accountable for what is done with any monies that are invested. But as investors, as policyholders, that we become much more aware as to the financial ramifications of any decisions that are taken. And with those few words, David, I want to thank you very much.
Thank you. I have a question here for you, but in the meantime, two cars are blocking the entrance to one of the nearby homes, and you're asked to move these vehicles as quickly as possible because the person is trying to get out of the particular home. The registration numbers are MY13, MY13, and Z1002, Z1002. Now, Minister, in government coming to the conclusion that ResLife would have to be liquidated, I'm sure people would want to find out from you, what were the other options under consideration?
Well, David, as I indicated at the very beginning, the assets that was on the balance sheet with respect to CLICO/ResLife, vis-a-vis the liabilities, meaning basically all of the claims for the persons in this room, as well as potentially those in the Eastern Caribbean, significantly exceeded the actual amount of money or assets available to be able to balance that liability. And so what essentially had happened was that the government issued, the previous administration had issued $600 million in debt to plug that hole. And the reality is that as we came to office and we restructured the debt, the existing burden of financing that debt so that the company of itself would be solvent really did not make sense. Because as I said, if the company on its own couldn't manage its liabilities, the government itself, given our debt profile up until a year ago, was also insolvent, and therefore it was impossible for the government to maintain payments under that arrangement and at the same time continue to put monies into the companies to keep it going. And for many of you in this room, you were promised that you were going to be paid. And the reality is that in the inability of the company to pay you as promised suggested that the structure and the nature of it did not add up. And so therefore we took a long, hard look at what we were doing in the context of the total restructuring of Barbados' debt and what the government was doing with respect to its public finances. And the reality is that we have committed under the Barbados Economic Recovery and Transformation Plan to reducing our debt to GDP to 60% by 2033. And this debt that would have been issued to Resolution Life to move forward form part of that. And then to the extent that most persons in this room, I would imagine after 10 years, will feel much more relieved to be able to make their own plans going forward rather than hoping that at some point that this company is able to become what you would call a going concern that is actually selling active business in the market. And so it is our considered view that given the government's fiscal circumstances at the moment, we've restructured the debt, and to the extent that the company in of itself and the confidence in the company in of itself is not there for persons to be able to write or to take on new business, then the only logical solution would be to wind the company up and to make these payments out in a manner that then allows all the persons in this room and your beneficiaries the ability to plan your affairs.
Well, the final question to you in this phase is, when is the payment process expected to be completed?
Well, I think based on the timeline that will be presented, we're aiming for end of August timeline into September. But the reality is that many of the persons in this room obviously who have waited 10 years to get to this point. And all we're asking you to do at this stage is when the plan is rolled out, and I know that there's a well-defined process, and I want each and every one of you in here, as well as those listening, to trust the process. And I know that everybody trust the process, trust the process, and whilst I can say to you that we have worked hard as government to be able to put things back on track. And I think that whilst everything will not go according to plan every day, you have to trust that you're going to see it through to the end. And I think that certainly we have committed ourselves to providing as much information to the public, and the staff at ResLife is more than happy and available to answer your questions. The Ministry of Finance, the Financial Services Commission, but the reality is that you have to trust the process. And to the extent that you're asked to either to provide information or to get a response, I can assure you that whilst I can't guarantee that there wouldn't be a hiccup along the way, the reality is that we've set in train a process that will deliver the relief financially for most of you, if not all of you, in this room.
Thank you. So you've got the policy perspective coming from the minister in the Ministry of Finance. Now we've got to drill down a bit more into exactly what is going to happen with your money. And therefore, we have Cheryl Senhouse, who is the Chief Executive Officer of ResLife. She is a certified general accountant and an MBA graduate. Her career has been focused on accounting and financial management, strategic management and implementation, operations management, and procurement. Now, many people would be curious to find out exactly how ResLife is going to determine who is entitled to payment. Good evening.
Good evening. Good evening, David, and good evening, everyone. The minister would have alluded to the fact that insurance is fairly complicated, and certainly as a company, we would have inherited a very wide range of policies. So while the ministry would have articulated a fairly high-level policy for the liquidation, we would have had to look at the details of the policies that we have on hand to determine which ones will be eligible for the settlement. So in terms of active policies, the primary criteria that we would have used would be if the policy was active as at the 31st of March 2019, and in addition to that, did the policy have a net positive cash value or a positive fund value? And this is important because some policyholders would have stopped paying their policies and simply allowed them to lapse. So the premium payments would have gone against the fund value, and as a result, at some point in time, the policy value would have gone to zero. And those types of policies are not eligible. So if your policy was active and it had a fund value, that is, we can say there is an amount that we owe you, we will be looking to pay that amount out to you. There were also a number of claims that would have come over to us, so where there were deaths or maturities on policies that have remained unpaid, those policies will also be included in the program. There were also surrenders that occurred prior to the judicial management and during the period of judicial management, which we will also look at paying out the cash surrender value that was determined at that time to those policyholders. There's also the executive flexible premium annuities, a fairly significant group of policyholders. Some of those persons would have come in and already turned in those old policies to us and received a new contract from ResLife. Regardless of which contract you're holding, either the FPA or the new ResLife contract, those policies will also be eligible. There is a caveat for this group of policies, though, in that the Minister of Finance, Prime Minister Motley, would have articulated that there will be some adjustments to the value of those policies, and we will go into that in a little bit more detail later on in the evening. And the final category would be pensions. We have a number of people, probably just over 1,000 persons who receive pensions from us on a monthly basis. We will go through the process of valuing that monthly pension in terms of determining what a lump sum payment would be for those persons and also include them in the settlement process.
There's been some public reference to how much money each particular policyholder or investor will be able to get and what else they will get in bonds. Can you expand on that?
Certainly, but before I go into that, I would just want to clarify in terms of what was included to just make clear to the policyholder body the policies that actually will not be included. So there are a number of policies that typically would not generate a cash value. So policies like term life policies that policyholders generally take out as coverage for a specific liability like a mortgage or so on, tends to be fairly cheap insurance just to cover that instance. Because of the nature of those policies, because there's no fund value, those policies will simply come to an end through the liquidation of ResLife. We also have critical illness policies, which are similar. There weren't very many of these, but they will be treated in the same manner because of the type of policy it is and because there's no fund value to refund the policyholder. Individual health policies as well as group health and life policies, again, because of the type of coverage, there's no cash value, it's short-term insurance. Those types of policies will also be terminated, but I think most policyholders in those categories are aware that we would have put measures in place to provide new coverage through a bid process. We will be looking to select an alternate provider to provide new coverage, to give policyholders the option, and I say the option, at the end of it, the decision will be yours, if to take up new coverage with a new carrier. And then finally, lapse policies, and I would have spoken to those before. So determining who gets what and how much each person gets from their policy. When we look at the fund value for those policies that are eligible, the fund value is the important criteria. How much value have you built up in your policy? That will be the main determining factor. So for active life policies, it's typically the net cash value. Those of you who would have been receiving statements on a consistent basis, your settlement value should not be a surprise to you, because your statements typically will articulate the value of the policy at any given time. We will look at the gross cash value of the policy and deduct any loans from that as a standard to determine the net value, and that is the amount that we will pay out to you. For annuity policies, it will be your fund value, and again, it should be a value that you are familiar with from your statements that you would have received. The fund value, which would be your premiums plus any interest accrued over time, is what we would be looking at as a settlement amount. For EFPAs, as I said, there is an adjustment here. We have been asked to reverse any interest that has been posted to those policies so that they revert to the principal amount. So we will be reviewing the information to make the adjustments so that these policy values can be restated. For claims, the claim amount would typically be reported to a claimant or a beneficiary at the time that they make the report and we accept the claim. So again, the value for claimant should be a value that you are fairly familiar with, having made the claim in the first place. So typically it is the face value or fund value of the policy, less any indebtedness, and as I said, this would have been reported to you previously. For pensions, those pensioners that I would have alluded to before, who are currently receiving a monthly amount, we did have to do some fairly detailed actuarial work to make a determination on what the lump sum amount would be for these persons. We wanted to make a conservative but realistic determination of what that lump sum payment will be, and through the actuary, as I said, they will look at your monthly amount compared to where you are in your guarantee period for your pension and report to us a reasonable value for payout for those persons.
Do you have any special arrangements for the processing of death claims?
Death claims tend to be a fairly long process, particularly if a beneficiary was not named. Standard practice for insurance is that where claims remain, where we are aware of claims but they remain unpaid, after a period of time, the funds will need to be lodged with either the regulator or the central bank so that persons are able to access them when they're ready. We basically will need to employ an accelerated version of that process if persons are not able to complete the claims process prior to the closeout of the company. So we appreciate that we have quite a few claims where persons may still be going through the legal process of trying to get letters of administration or being able to administer the estate as the beneficiary. That process may still be ongoing. We will encourage those policyholders at this time to try to bring that process to an end if they are able to, so that they can finalize the claim and so that we can pay out in the timeline that is before us. However, if they're not able to do that, some provision will be made through a regulatory process so that those persons, whenever they are ready, are able to access those funds through some designated entity at that point in time.
And for the person who is turning up to go through the process, what paperwork is required on their part?
Okay, so I think everyone in here as a policyholder should be fairly familiar with the documentation that we're required to send out. So again, as this is to some extent a legal process and still a regulatory process, everyone will receive written communication from Resolution Life, formally advising of the liquidation, advising them of their fund balances for their respective policies, and giving them a very specific appointment date and time when they should come into us with their list of documents in order to collect their payment. Once they receive those documents, they come into us on the specific date, and once they're satisfied that their details are accurate, we will provide them with their payment. They will be required to sign a release with the company, and once everything is in order, they walk away with a check in hand on that day.
You need to set up an appointment? Or can they walk in?
You will be advised of the appointment date in the communication. We will be asking persons, please and kindly, not to come into us on your own. You will appreciate that there are numerous policyholders, as you can see just from this room, but in fact there are about 21,000 persons that we will need to deal with, so we need to take a very structured approach to the process. You will appreciate that if you are scheduled for week 1, if you're scheduled for week 4 and you turn up in week 1, it is quite likely that your check has not been done yet. So you really would not be doing yourselves any favors. So we're simply asking people to adhere to the timelines that you're given in those communications, come into us on those specific times, and we will be able to deal with you expeditiously on the given date to be able to provide you with your payment and your documentation. Policyholders are also reminded that they will need to bring into us some documents to assist us with the process. So as the minister alluded to, it would be more than helpful if you can ensure that you do have those documents to hand. And primarily, your original policy contract is important. It needs to be brought back into us to extinguish the claim and any future claims against that policy. We are still a regulated entity. There are still also standard requirements for financial services entities that we will need to abide by. And in that vein, policyholders will need to still bring the 2 forms of government-issued ID and proof of address. And that is a recent proof of address to assist us in meeting those requirements despite where we are. Yes, so valid government-issued ID with a photograph.
And final basic question from me, because I'm coming to the floor next. So when I come to you, you have 2 mics here, and there's going to be a roving mic at the back. All I require of you is for you to identify yourself as you pose your question. So the final question from me so far at this stage would be, what about Barbadians who live abroad? How are they going to be treated?
So for persons who live abroad, or any person who is acting on behalf of a third party. So if you live abroad, you may designate someone to act on your behalf. If you do so, you need to ensure that that person has the relevant and valid legal documents that authorizes them to act on your behalf. We also have a number of instances where policyholders may be incapacitated in some way, and they need to, the third party acting for them needs also to produce the relevant legal documentation to support, to let us know that they are authorized to act on behalf of the named policyholder. That's very important, particularly in a situation such as this where we will be handing over funds to people. We want to ensure that it goes to the right person at all times. With that being said, David, I would also want to clarify just one final point with regard to the payment process. We do have a number of policyholders who have multiple policies. And just to follow on from the minister's statements about the limits on financing that is available, we would want to ensure that persons are very cognizant of the fact that in terms of the payments, an individual will be entitled to a single payment of $20,000, even if you have multiple policies. So I know there's some of you who hold 3, 4, I've seen instances where there are 5 policies, but we have had to work very diligently with the Ministry of Finance to finalize the details in terms of the funding that needs to be provided to do this. We have been advised very carefully that per individual, there will be one cash payment. The balance of any amounts due to policyholders will then be settled as bonds. So if you have a look at the slide that is on the screen, generally policyholders, so the categorization is that amounts less than 20,000, up to 20,000 will be settled in cash. Amounts over 20,000 will be settled via a bond. So for instance, if you're owed $25,000, you will receive a check for $20,000 and a bond with a face value of $5,000. So where there are multiple policies, we will sum the total amount owed to you, provide you with a payment for $20,000 if the total value is more than that, and the total balance that is owed to you will then be provided with a bond. There are some instances as well where policyholders, such as EFPA policyholders, as originally outlined, the settlement to them is in the form of a bond only, and that is as originally outlined. Persons who would have surrendered policies, their settlement would also be in the form of a Series B bond only. And we have one other category of policies, so those persons who have annuities that are going to mature in a period that is longer than 4 years, those persons will also receive a bond only. All other policyholders will be entitled to a cash settlement, as I said, up to a limit of $20,000 for the total amounts owed to them, and the balance will be settled via the relevant Government of Barbados bond.
We also have with us Mr. Ian Carrington, who is the Director of Finance in the Ministry of Finance, Economic Affairs and Investment. He's a former Director of the National Insurance Scheme, former Chief Executive Officer of the Financial Services Commission. He is a Fellow of the Certified General Accountants of Canada, holds a Master's of Public Administration and a postgraduate diploma in Public Policy from Harvard University. And on my immediate left is Tony Hoyos, who's chairman of ResLife, a fellow of the Association of Chartered Certified Accountants, a real estate developer. He served on the board of directors of insurance and financial services companies in Barbados. Either Ms. Senhouse or one of the other members of the panel could perhaps address the question of why there's this distinction in the way that the policyholder has been treated versus the person who holds the EFPA. In the meantime, let me remind you that by a show of hands, you can come to the microphones on either side of the aisle, and if you show your hands, then well, come to the microphone immediately. Don't just wait for me to call you. And as it relates to the back, there should be somebody there with a roving mic, and they will come to you. Yes, just let Ms. Senhouse answer the question. Yeah.
Yes, David. I think very early on, during the judicial management process, when the policies were examined, it was determined that those EFPA policies were in fact not insurance contracts, but they were investment instruments. Coming into Resolution Life, they were treated differently to the rest of policies, in that the solution that was applied at that point in time was also a bond, and a bond only, that is structured, was to be structured quite similarly to the bond that is now being proposed. So in terms of the EFPA policyholders, there really is very little difference except for the duration of the bond between what was proposed under ResLife originally and what is now being proposed through the liquidation.
Thank you. Yes, sir. Just identify yourself and pose your question.
Pleasant good evening to the head table. Pleasant good evening to ladies and gentlemen. My name is Andrew Cave, and I just want to thank you for every single thing that you would have said to us and everything. But my question to you tonight, I heard you speak to pensions. My question is, does that speak specifically to group pension?
Okay, so that does not speak specifically to group pensions.
Okay.
We have a number of institutional pension plans that are under management by Resolution Life, and those are quite separate to standard pension policies. We are in the process of undertaking a legal review of those contracts so that we are clear on what the process needs to be and what we're able to do in terms of transferring or treating to those policies going forward. Whatever is determined with regard to those policies will be communicated to the trustees of those plans for onward communication to the underlying plan members, so that they are also then clear on what the next steps with regard to the plans will be. So to reiterate, those plans are a little bit different to the policies that are owned by individuals. So we do need to take a more structured approach to determining how we treat to those and what the approach will be for the transfer of those assets.
Okay. Thank you.
Thank you very much. Yes, sir.
Hey, good night. Good night to members of the panel. My name is Derek Catlin. I perused this entire document provided for the policy holders here tonight, and I realized that I can fall into this category dealing with the flexible premium annuity, and this example with the Tricia in terms of where it states if your policy doesn't mature within a 4-year period, because I have a life insurance policy as well as a retirement savings plan. My retirement savings plan is going to mature at the age of 55, while my life insurance at the age of 65. I'm presently 40 years old as we speak. So I realized with the breakdown here, they stated that in terms of the cash net value, they are providing this Series B bond. So my question is, what is a Series B bond? Does it have any clout if we want to go and get a mortgage, a loan? Can I cash it in? What is really? So that's my question to the panel tonight. Thank you.
Thank you.
All right, the Series B bond is the same Series B bond that was included in the government restructure of last year. So it is? Sure.
Sorry. Yeah, I know. Now, the government of Barbados in October of last year issued a set of bonds designed specifically to solve for individuals, corporations, insurance companies. The Series B bonds to which persons will be issued are designed to spread over 15 years. Now, as you would appreciate, given the nature of the government's financial circumstances, we structured these new instruments to be able to allow for the government to service debt and bring it down with respect to what the overall target will be over the next 15 years. And so, as we are bringing our overall debt down, the Series B bonds, which are very different in the nature, because in the past, if anyone in this room held government of Barbados security, you would have to wait until the end of the 15 years before you got back your principal. These new bonds are structured in a way, we describe them as amortizing, which means that we pay you back a piece of your principal every quarter over the course of the 15 years to be able to make sure that the cash flow is available for most persons. Now, I have to say to you that the Series B bonds, given that we are in an IMF program, in our ability to finance our debt, the bonds are structured in a way that allows for a grace period with respect to the amortization of 4 years. Now, you will receive the interest payments on the bonds within the first 4 years, and then the amortization, the repayment of the principal starts from year 5 and goes all the way through to the end of year 15. Now, this is being done in a way so that the government can give the confidence not just to bondholders, but certainly you know as part of the solution. So if your value is greater than 20,000, then you will be issued that Series B bond, which will then allow us, the government, to be able to repay you and have this solution in place for most persons to be able to. Yeah, I'm going there. In addition to that structure, the interest rates, and these new bonds are, as I would have mentioned, the interest rates vary, and I can say to you right now, for the first year, for example, the first 3 years, the interest rate on any bond is 1%. In year four, the interest rates will be 2.5%. And then from year 5 to maturity, it will be 3.75%. Now, we do have, in addition to that, and this is where the math gets interesting, because the bonds are structured in a way, and I think this is important for everybody in this room to understand, that whilst we are working on this solution for CLECO/ResLife policyholders, the government has restructured its total debt, and therefore we are currently working on a mechanism that would allow for persons to trade government of security that we have issued. Now, the bonds in the past, you would have had, if you wanted to redeem any security of government, you would have to redeem the entire bond or debenture in full. These new bonds that have been issued, and that the persons in this room who will be impacted will be issued, are now going to be issued in what we call strips, which allows each of you to either trade in part or in full, and depending on the parts that you may wish to trade, there's a specific interest that is associated with that. And I think that as we move forward, and we will be giving more public information with respect to how that would work, But the reality is that the new structure of these bonds would allow for persons to be able to plan and determine for themselves whether you're going to hold for the full 15 years or whether or not you're going to sell a part of it if you think that you need more monies up front. And the market for that, the Ministry of Finance, working with the central bank, is creating the platform for the trading of those securities. And so I don't want anyone to fear whether the bonds are marketable or not. The government of Barbados, we have restructured the debt, and to the extent that you now have greater confidence that you will actually be paid what we say you will be paid is there. I can't, and I think at this stage, there's investor interest in being able to participate in the trading of securities in the market. And that's all I'm prepared to say on that at the moment, but I can assure you that in the coming weeks, there'll be greater public awareness being brought to this so that no one in this room will feel the need that they have to hold a bond for 15 years if you desire that you need to get access to greater cash than that which we are putting on the table with respect to the $20,000. So I hope that answers your question, sir. I didn't see where you came from.
Yes, ma'am.
My name is Egla Atwell. Well, the minister just answered one of my questions, so that's the other two. Are these payments going to be taxed in any way?
No, ma'am. Interest is the only thing that is taxed with respect to securities. Okay? So none of these payments will be taxed in any way, form or fashion, other than the normal withholding tax, but that's only on interest. Okay?
And is this the final episode in this saga? and I asked that question because, and I'm just asking, should the government change the next 5 years? Can this be reversed?
Miss Atwell? That's a very interesting question. And the only way that I could possibly answer that question is to say to you that this government is committed to meeting the targets under the Barbados Economic Recovery and Transformation. Now, if at the end of that, the people of this country determine that they wish to go in a different direction, I can't say yeah or nay, but we have set a path to bring Barbados' economy back to stability, to bring our debt down. Now, as far as this solution is concerned, as the structure that we are putting in place here and the success of the program would allow for many persons in this room to get a sense of relief. And we are committed to seeing it through. And I think that to the extent that the public of Barbados will be satisfied with the results of the overall program and bringing this CLECO/resolution, ResLife resolution, this should be, I hope, the final episode. And I know that for many of you who may have to get the Series B bond, the opportunity will be there for you to trade, either, as I said, in part or in full. And to the extent that by the end of August into September of this year, all of those payments up to $20,000 will be made, the bonds will be issued, interest will start to be paid on a quarterly basis. And so long as we are in this process, and I think you're going to hear some interesting news on Friday, but the point is there will be repeated signals to the market of confidence that Barbados is turning the corner. And I think that with that, whether you choose to hold the bonds or to sell the bonds, overall confidence in the plan and in this solution, I think, will increase.
Thank you.
Thank you, ma'am. Sir?
Hello, good night. My name is Tyrone Ford. I receive payments through an annuity pension. Now, my first question would be to the Honorable Minister. Now, when I look at this brochure, and I sort of fit myself into one of these categories, the category that I looked at, I would be receiving, well, the minimum payment or the maximum payment plus special bonds or special issue bond. Is that going to operate like these Series B bonds, as you explained?
Yes, sir.
Okay, that's one question. My next question is to Ms. Senhouse. Now, my policy had matured, and it took more than 2 years before I actually got a payment. And payments were supposed to be made retroactively. They started, and then they stopped. Now, my concern is, in reading this brochure, you're going to value, the actuary is going to value the policy. Will that retroactive payment be taken into consideration? Because you've actually said that you will only receive up to this 20,000. So if that retroactive payment plus what you value it now, and you were supposed to be given in the 20,000 because you value now, what will happen to that retroactive payment? Don't answer yet. The next question is that I would have agreed to a guarantee period for receiving the annuity payments. And you mentioned also that the annuity, that the value might be up to the guarantee period. What if beyond? Because when I do my straight mathematics, the guarantee period does not cover what my value was when it matured.
All right, I am going to attempt to answer the entire question. The pensioners have been afforded the special bond simply because of the category of persons they are and the expectation they have, which is that they will receive consistent payments. The special Series B bond, unlike the Series B bond, pays principal and interest from the very first quarter. Again, we would have done that in recognition of the fact that pensioners are supposed to receive a payment on a monthly basis. And we wanted to ensure that they continue to benefit from a consistent stream of payments so that they can manage their affairs. So that addresses the structure of the instrument. It is a 15-year bond. It pays interest and principal on a quarterly basis with a 0.25% interest rate. The life of the bond is 15 years. Now, in terms of determining the overall pension, you are correct in that there are arrears that are outstanding to some pensioners. Pensioners also, in receiving their monthly payments, are guaranteed the payments for a specific time at a minimum, but while you remain alive. So you're quite right in that your straight line calculation will not yield what you believe to be a logical result. And this is the reason we had to undertake the actuarial valuation. So we would look at what we've guaranteed you as a pension. We look at the guarantee period, but we also make an assumption on how long we think you will live based on how, based on your age at this point in time and where you are in your guarantee period. So the actuarial valuation seeks to ensure that we do not disadvantage you simply because you are 5 years along the line of your 10-year guarantee period. So we don't want to say we will simply calculate the next 5 years of payments and pay you that. We recognize that you are indeed guaranteed a pension while you remain alive, and as a result of that, the actuaries would have had to come back in, apply all their usual assumptions about mortality and so on to come up with a value that is reasonable to determine a lump sum payment for pensioners at this point in time. We will look at that amount plus any arrears that are owed to those pensioners to make the final payment. So we certainly have not forgotten that there are amounts outstanding to some persons. We will consider the entire debt to those persons and make the final payments to you on that basis. I hope that answers the question.
Thank you. Sir?
Hi, good evening to the panel. My name is John Collymore. And I sat and listened with rapt attention, primarily to you, Minister Straughn. And it was very interesting to note that you mentioned that it was indeed a private matter. Private matter meaning that CLICO was a private company. But I beg to differ. I want you to listen to me very carefully, right? First of all, a regulator, we all know, we all here know that government is a continuum. We know that. So when I say government, I don't need to get further into that. A regulator appointed by government who supervises a specific task. Part of this task, this individual or individuals look at what products are coming on the market and approves this product, stating that this product is good for you, you, and you. Let's look at that. It ceases to be a private matter, especially when you have something called the Insurance Act. The Insurance Act, Minister, was not drafted by the people sitting down here. It had specific items and areas in it which said clearly that should a company not do A, B, or C, what should happen? It then ceases to become a private matter and it is a government matter. I can tell you this because I wear several hats, and one of my hats is, well, I will leave it at that for the time being, right? So when you start by saying this is trying to find a solution, the solution is a government solution, that the government, we are all taxpayers here and we are investors. So it simply means that any solution should obviously come from government. So I didn't like that term you used, the word private, because I know CLICO is a private entity or was a private entity. Good? And we all here know that. But when you have individuals who are government employees and who act in a supervisory position and who failed in their task, don't try to shift the blame on the investors or policyholders. That is point one.
Before you go on, Mr. Collingwood, can I respond?
Sure.
I think you misinterpreted. I think you may have misinterpreted what I was saying. So just allow me to just clarify. Okay? Now, I agree with you that regulators will review products that come onto the market. But there's a level of risk associated with each product. And I don't think the assumption that if a company is to be wound up, that the responsibility of the government or the regulator to do the winding up is separate and distinct from taxpayers putting monies to dissolution. And that is the part that I was referring to when I said that CLICO is a private matter, because the regulator is not responsible for the cash values or the cash management of the institution in the way that you that will lead you to infer that taxpayers should come to the rescue with respect to a private transaction. So I just wanted to make it clear that the supervisory responsibility is separate and distinct from taxpayers' monies being brought to a solution.
Minister, you are eloquent with ambiguity. Now, let me say this. Did you read the judicial manager's report? There were 6 actually issues that the company was in breach of, which is part of the Insurance Act. I can go into, financial statements. In terms of having the requisite assets there. You can go on and on, but there's 6. It's in the report.
Sir?
I don't want to bore who is here, but nevertheless, let's speed it up a bit.
Yes, thanks.
I've said that already. Good? So I'm saying that the fiduciary responsibility falling at the government, because the government's position is a regulator. I am saying the government can't escape from that. Now, to Ms. Senhouse, you spoke about the EFPA, Executive Flexible Premium Annuity, as an investment. Now, I want you to know that a whole life policy in itself is an investment too. I said that to actually try to give you a sense of what is happening here. If you read the contract, which is the EFPA contract, you will see the wording, and I would like you to read from page 1 straight down, and you will see this, that the word EFPA is an Executive Flexible Premium Annuity, which actually an annuity, it has, you pay in, and there is a payout, right, at a point in time. So look at the contract first before actually saying that it is an investment, because every single policy under that CLICO had was certainly an investment too. So you can't differentiate one from the other. No, if I may, right? Miss Senhouse again. My old schoolmate, Mr. Carrington, is still there. I acknowledge you, sir. Let me say this, Miss Senhouse. what I want to find out is, which we didn't mention as yet, there are employees or former employees of CLICO, note, employees, who would have contributed to their pension, who no one spoke about. And you know why no one spoke about them? Because the second report from the judicial manager stated, obviously, that they had to seek legal advice with respect to the actual, where the contributions were. You know, I don't think that alien just simply came down and, you know, presto, and it disappeared. I say that in jest for the simple reason to add a little flavor to this. We need to take into consideration every single contract that CLICO had, or else people will obviously fall through the cracks. Speak about employees in a bold tongue and say, yes, there are employees, there are 700 employees who contributed to pension, who received statements from the judicial manager, and who the judicial managers already got a valuation, and the valuation was done by actuary, and the valuations are there.
Sir.
It's that simple.
Sir.
Go ahead.
No, not really. There are a number of other people here lined up, and I'd like you to come to a conclusion.
Yes, I will. I'm certain that who here sitting down will bear with me.
No.
Okay.
Remember, from
You're the moderator. You're the moderator.
Remember, from the beginning, we made the point that as much as possible, we want to get to questions.
Yes. Okay. Yes, we will. But Ms. Senhouse, I would like you to give consideration to that, a word called former employees with the pension. Good? I would like you to do that. All right? Now, finally, I will ask you this. And note, some very good things came about, especially trying to seek an alternative, especially once you pull the rug from under some person, you're trying to seek an alternative for individuals who obviously would be disadvantaged. I love that. But I'm just trying to pull things together so that both you and the minister will have a clear understanding, and Mr. Hoyos to a lesser extent, so that everyone will be on the same page. Right? Now, as I said, finally, secondary market. Why don't you, I mean, I probably would have charged a fee, right? And the minister knows where I'm coming from. In Parliament, people talk about fees, so it means you have a client, right? I would probably have charged a fee. But can we create a secondary market where we can actually trade, or should I say, these bonds? Because if you look at some of the ages, and I'm telling you, I know this is factual, where some persons are in the 80s and 90s, etc. Some of them do not have issues under which you will call under the Successions Act, meaning that they don't have any issues, they're not married, etc. And they don't have long. So it means then that while you're doing your restructuring under the program, you can also then look at this secondary market where I might be willing to part with 2.5% or 2% to some investor, because as you know, a company is infinite in terms, but I am not. Me, I can die tomorrow. So I'm not infinite. So all we need to do is to create a second market whereby a financier can just simply pay monies and make a business out of it, whereby persons who have a very short threshold in terms of life expectancy will be able then to redeem their bonds and have money in their pocket.
Thank you very much. Thank you.
Thank you very much, gentlemen and
you.
ladies.
Mr. hear a response?
Yes, and I will try to be brief in my comments. With regard to the EFPAs, I would just want to reiterate that in developing the solution, it was determined that they were simply investment contracts. I appreciate the point that you are trying to make, that the other insurance policies are also investments, but certainly of a different kind. There are some specifics, some characteristics that are unique to insurance contracts, and it was found that those EFPA policies were not quite the same, and as such, they were treated differently in terms of the solution that was applied in transferring them to Resolution Life. And as I said, the solution that will be applied now is very similar to what was previously proposed. Now, in terms of the employee plans, I believe the very first question that was asked actually related to that. We are well aware that we are holding funds under management for CLECO employees, CLECO agents, as well as about 3 or 4 other institutions. It has not fallen between the cracks, let me assure you. We are well aware that we're holding those funds under management, and I will reiterate again that that is a little bit different to an individual pension contract. So in that regard, we are taking legal guidance on what our responsibilities were under those contracts, and we have committed to ensuring that once we have those legal opinions, we will communicate with the trustees of those plans, because those funds are held in trust on behalf of, and that has a very specific meaning. So once we get the legal opinion, we will communicate through the appropriate channels so that those persons can follow on and communicate with the plan members about what the next steps will be regarding those plans. So again, we are aware, we do have the funds, the plans, we're aware that there's an obligation there, and we are trying to finalize what the treatment will be for those. They have not been forgotten.
A notice here for Kurt Rochford. If you check your pockets and you don't find your ID and credit cards, they have been found, and you should go by the registration desk outside to get them. Thank you very much, Kurt. Next question, please. Yes, ma'am. She was there before you, so we'll go with her.
Hi, table.
Yes.
My name is Marlene Marshall. Earlier, you said that if one should have more than one policy, that the maximum that can be paid would be the $20,000 in cash. Did I understand this right? Okay. If one should have, say, 2 policies, and the 2 policies are under the $20,000, what happens?
Once the combined value of the amount that we owe you is below the 20,000 threshold, you will receive that amount in cash.
Yes, I wanted that clarified. Thank you.
Okay.
Thank you. Yes, sir?
Hey, good night. My name is Kurt Rochford. Yeah. Yeah. I will go collect the cards and stuff afterwards. My question is, I'm here representing my mother as power of attorney. She has a flexible premium annuity at 80. She has now reached age 80. So we just want to find out clarification of the settlement now. How do y'all, are y'all handling people over 75 different from other policyholders? Just want to find out clarification on that in terms of settlement. I think it would be personally kind of unfair for her to get a 15-year bond at this stage of her life.
Sorry.
She has a flexible premium annuity at 80. I think when I spoke to a representative at ResLife, they said that when they reach age 80, you were supposed to get a lump sum payment or something like that, since they were not, right?
Okay, so without asking you too many questions about your mother's personal circumstances. I would say the standard approach would be that she would receive a lump sum payment and then the bond. If it is over 20,000.
So it's a clarification that, so if it's over 20,000, the check would be for $20,000 and then the rest be a 15-year bond?
Yes.
Even if, okay. So there's no special treatment of people over 75 or over 80?
At this stage, no.
Okay, thank you.
Thank you. Yes, sir.
Good afternoon. My name is Wayne Richards. Two questions. One of my fellow consumers, she was noticing that you can be issuing money from about the 10th of June. She wanted to know when to expect the letters. When would we expect to start to see letters? That's basically what the lady. That's one of my fellow consumers. I'm posing the question for her first before you deliver mine.
Yeah, so I will respond to you. Typically, you will receive your letters about 2 weeks before.
Mm-hmm.
We will be seeing different categories of persons each week.
Mm-hmm.
So you may not be slated to receive a letter to come into us for the week of June 10th. You may be further down in the process. But to start the process, we will send out letters to the persons who need to come into us during the week of June 10th, a minimum of 2 weeks before that, so that they receive it in time and are able to come into us to meet the appointments.
Okay. Right. Okay, ma'am. There's one. Being reminded about our own mortality right now, what I really wanted to know was, you mentioned about the 15-year bond, and generally you talk about the interest rates associated with them over the period of time that the bond's maturity. But you didn't mention about a penalty for cashing in the bond. Is there a penalty to cashing in the bond? Generally speaking, with bonds, if you cash them in before the maturity time, you suffer a penalty. Because I think this should be a very interesting question, because people will need to know if they want to suffer the penalty and have the money now, or wait for later, and there may not be a later in some cases for some people. So I heard about the interest rates and for the Series B and everything, and it all sounds well and good, but what is the penalty if you decided I get this bond and I want to cash it in? No.
You describe it as a penalty, but the bond pricing is usually done at a discount. So the present value, or if you need monies today, then somebody has to hold that until maturity. And so the penalty that to which you refer, the bonds are priced along what we call a yield curve, so that at any point in time, the value of it is known. So if you're prepared to trade to someone else, then the person purchasing it from you would have to purchase it at what we call a discount, so that they can see the return when the bond matures. So you will have to determine whether you are prepared to take the discount. You refer to it as a penalty, but it's a discount, in order to get a further lump sum above and beyond the 20,000. And as I said, the bonds are available to be sold in strips, so you don't have to sell the whole thing, but you can sell parts of it based on your needs, which is a lot more flexible than what it was in the past.
I don't believe that it would get the bond sold. Let me say now it was at 20,000. I wouldn't get it sold for 20,000. What I'm saying is time
That would
value.
be a very generous person.
Time value of cash now. The time I gotta wait for that, I would rather have, even if you told me $14,000 right now, I wanted my money now, rather than wait for 20,000. So that's all I'm saying. That's me.
Right, as I
I'm
said,
not speaking
sorry,
for everybody.
as I indicated earlier in the previous, I think Mr. Collimore's name, we are in the process of putting the platform in place with respect to facilitating the secondary market for trading these securities.
Right.
And so, but that notwithstanding, if you know someone who's prepared to take the bond off of you, then you can easily do it how we call over the counter, where you just transfer it to another individual in that way. But we are, as I said, in the process of getting the platform in place that would allow persons to be able to effectively do what you're asking.
Okay, thank you very much, sir. Thank you. Next.
Hi, my name is Pearson Bovell. I know Mr. Ellis doesn't want comments, but I just want to...
No, don't put it that way.
Okay.
Because I gave some latitude earlier, but generally speaking, given the number of people who are asking questions, we need to be tight. So if you have a comment, make it tight.
Clarity. I realize that in Barbados, everybody calls everything that deals with retirement a pension. And I would like ResLife and you, Minister Straughn, if the government can... I had written previously about calling the whole thing retirement planning. A pension must have an arrangement with an employer and an employee. So an individual FPA can't be a pension, it's a retirement plan. So just like a pamper, everybody calls everything a pamper. Huggies is a brand, Snuggies, whatever, right? They're disposable diapers. So the FPA is not really a pension, it's a retirement plan. Okay, it's a retirement plan and it's part of a number of retirement plans. A pension must have an arrangement with an employer and an employee. Question. Under the retirement plan called an FPA, provision was made as a standard for putting beneficiaries, vis-a-vis spouses, where you would have a survivor's benefit, children, etc. If you now convert to a system where you're paying a maximum of $20,000 irrespective of whatever the person has as their current fund value, will they be allowed to move to a stage where they are also able to assign beneficiaries onto that, what will now be an investment? Because those family members, the beneficiaries, will now be at a disadvantage because you would have placed beneficiaries for the express purpose so they will not have an economic deficiency should the person die. Should the person who's getting the retirement benefit die, the beneficiaries would then be allowed to have that benefit continue on over a specified period. Spousal benefit, etc. What I'm asking, has ResLife or the government look at having some system when you pull the rug, as Colin Moore said, from under the feet of these people who are getting retirement incomes to protect those family members who are beneficiaries currently? Or in the case where the fund has not matured yet, where they can also assign beneficiaries with the current arrangement that you are outlining? That's my question.
Thank you. Yeah. Response?
Yeah, sure. So, based on the framework that we have set out here, and I think Ms. Senhouse spoke to the fact that there is to be an actuarial review specifically to deal with those issues. But generally speaking, once we embark on this process with respect to the determination as to what the value would be, now in the case of a bond, one can always assign the bond to any person in the event of your death. And so therefore, by using that principle, then the beneficiary, okay, would be, in a sense, taken care of in that context. And so this process is capable of allowing for that, but just bear in mind that this is intended to bring the operations of CLICO/Residual Life to an end. And to the extent that there are any outstanding issues, then either the regulator, that may take longer than September, then administratively these things then will be passed to the regulator for administration. But it means that throughout this process, and unfortunately it means that persons now equally have to think about administratively how they want any of these monies with respect to the payment of bonds in terms of designating a beneficiary. Those are things that you also have to bear in mind as part of your planning going forward.
So your answer is yes? My question is, there was a provision for spousal benefit, in the
I'm saying,
occupational.
I'm saying to you that throughout this process, you have to determine, sir, once the bonds are issued, who you would like the bonds to be conferred to in the event of your death.
And that will have provision for multiple persons?
Sir, that is entirely up to
Okay.
any person in this room to determine the quantum and who they want to be the beneficiaries in this process.
Thank you very much. Yes, sir.
Good evening. The name is Orlando Cox. I wonder first, my question or my scenario, because I had a lot of issues, but I'm going to keep it personal, seeing we have limited time. So I think my address would more indulge the interests of the minister and Ms. Senhouse. First, I want to ask the minister a short question. Is this whole scenario cast in stone? Can there be any variation to what has been set out?
I'll say to you that if there's a way for the taxpayer to not have to pay out more money, that's really the government's role in this scenario. We have looked at it. We've tried to be fair with respect to all the persons in this room and the policyholders CLICO, whilst at the same time not exposing the taxpayer further. And I haven't seen it. I don't think the director has seen a fair there, but if there is, but as far as this process is concerned, this is the fairest way that from a fiscal standpoint, the government is able to deliver to the policyholders whilst keeping the interests of taxpayers first and foremost.
All right, I want to ask you to remember that word fair because it caught my attention. The first thing before I go into my short discourse about, and I'm gonna ask everyone here, and I'm probably sure that after I then speak to you all, that I would have the support, and I'm begging for the support of all the people in here to rally with me. The judicial managers, I want to go there first before I explain to what I'm saying. The judicial managers read the old CLICO before it turned over Resolution Life. Treated the people in this country with a level of disrespect that goes beyond one's wildest imagination. And here's my scenario. I have a situation, and I fall in the category where more than one policy exceeds $20,000. But my scenario is peculiar in that being an ex-employee, I had a mortgage from CLICO. I left CLICO and Resolution Life and all of them with my values exceeding theirs by over $50,000. Prior to judicial management, a decision was made to use my policies to liquidate my mortgage. Obviously, and the people who agreed to it had the authority to do such. The company then went on to judicial management. Naturally, that would have been halted. That being in mind, and because an arrangement was made, the mortgage payment ceased pending what was agreed on. Some years after, about 2 or 3 years after, the judicial managers wrote me on payment. I explained to them just what I just said to you, in that it was agreed that they would use my policies to liquidate my mortgage. Now, the judicial managers did not respond to me until 5 years after. And 5 years after, they demanded a payment on, as a matter of fact, there's judgment on the house. I wrote them, explained to them what had happened. And I said to them, the very fact that you did not respond to me, I was of the opinion that you were in agreement with what would have transpired. Now, in between there, I would have been charged $10.48 in interest per day. So between that 5 years, they incurred $21,000 in interest, which they are now, as a matter of fact, by the end of last month, they were asking me for $25,000 up front and $2,000 cash because I put a proposal to them. Now, I do not want to aggregate my responsibility of being owed, of paying my mortgage. But also based on the arrangement, they had more for me. Even at this point, the last payment that they asked me for last month, I'm owing them $80,000. Right now, between CLICO and Resolution Life, owes me $120. But the fact that I didn't respond to them by Friday, I believe they might be, by the end of last month, I might think they might be now sending the third judgment. Now, I am of the opinion that the very fact that I am responding and telling the judicial managers the circumstance, I find it grossly unfair for them to want to sell my house or put it up for sale, which may be in the process as we speak. Now, my issue is that I'm going to fight them on the interest. And the very fact that I can only get $20,000 where I have access, if it were per policy, over $50,000. So I am in a dilemma where people owe me much more than I owe them. But because of how judicial management dealt with people and because they can't be sued, they did what they feel like to the detriment of people. Now, this cannot be right. And I'm saying to you that I am prepared to go to court because there's something called the law of natural justice, and they need to respect people's rights. If I can be told that they can be all certified, I don't even bother with the difference. But I have kids, I have family, and they need to be sheltered. And I'm saying between the government, CLICO, and Resolution Life, need to get the act in order because people are suffering.
All I can say, sir, is I'm very sorry to hear of your circumstance. And it is clearly a very unique circumstance, very different from most persons here. So what I will ask you to do is after we are finished, just make yourself known to Ms. Senhouse, and we will liaise with the judicial manager to see where we can come to some arrangement on this. Okay? I'm very sorry.
Yes, ma'am.
Thank you. Thanks to the panel for coming and taking the time to help us through this challenging moment. My name is Sonia Welch, and I stand here as a pensioner. I say that because the term pensions and annuity, they're often being used almost to mean the same thing. I think Mr. Bavell referred to that just now. And in fact, just going to say, in fact, 1 year before I officially retired from my job, I had a small annuity, and it came very small. And when the BRA did my income tax, they gave me the $40,000 tax allowance. And I'm challenging, are we discussing that? No, because I don't know if I was truly a pensioner then or not, having not retired from my official job. But that was one point. Now, in the debt restructuring, the domestic debt restructuring, a two-step proposal was made where it was $20,000 in the first instance, and then $30,000, and then the bond. My question to you is only, a pension is a pension is a pension, so how come that particular approach was not also considered for this? You may have a good reason, but I thought I would ask you.
Right, so when we when we modeled our cash flows in terms of, sorry, let me start again. When we restructured the debt in October, we knew then that we had to pay particular attention to the pensioners who bought Government of Barbados securities. And so that solution was designed for those persons that would have bought government paper in good faith, and given that you were living on a fixed income, we felt it was our responsibility as government to be able to bring that relief in advance to pensioners. Now, this is a very different scenario, given that the quantum of cash flows that we now have to, given the advance that we would have done there for the pensioners and the other commitments that we're making, then it does not allow us to do the similar thing in this case for those persons. Now, you gotta ask, we are in a situation where cash is tight, and we are only able to do this given that we have done the overall debt restructuring, and there's only so much cash that you can put in, and the whole thing hangs together. So, unfortunately, this is where we landed with respect to being able to resolve this matter.
So it boils down to the issue of available cash. That's it.
Yes.
Okay, thank you. Thank you very much.
Thank you. Yes, sir.
Good evening, panel. Good evening, all present. My question is one of clarity. With respect to the annuity policies maturity date, is this the date at the time the policies was initially issued, or is this the date at the extended period when ResLife took over the policy, the portfolios?
This will be based on the amended maturity date.
Okay. Does mean that some of us who might be looking for cash will actually be getting bonds. Okay.
Yes, ma'am.
Good evening. My name is Joyce Stewart. My question might sound simple to some people, but it's really hurting me. A couple of years ago, when the first attempt, I think it was, when the Resolution Life was formed, I got a letter, which I gather most of us did, to go to Resolution Life to sort out payments on something. And I went with a little bit of trepidation. When I retired, I thought I was being very proactive, and I put money into various areas, including a fixed deposit for myself and one for my grandson. Fixed deposit, as it was explained to me back then, was that it's an investment which the money stays there for a specified length of time. During that time, it is invested according to the company's needs and whatever, and I get paid an interest, etc. So I have my policy, and I have the reports that come telling me what the interest is. So I know, as of now, how much this thing is worth. But when I come in here tonight, it starts before tonight, but let me do it tonight. I come in and I see this thing, and I'm asking myself, where does my thing fit? If it is it's not the insurance, a pension or policy in the general terms, it is, well, a fixed deposit. And I don't know if it comes on the EFPA or if it comes on the annuity policies. I'm hoping it doesn't come under annuity policies, because when I went to Resolution Life those months ago, I left there shaking, because my money, which was owed to me by government and paid to me legally, et cetera, was being taken from me, and I was told, you're going to get $2.25 or something ridiculous like that every month as a pension from the money you put in there. So I'm saying, would I right? because I come in there with a lump sum of money and I put it in a particular investment plan, and now you're telling me that because we're in financial difficulty, etc., you reformat my investment, and you tell me I have this, I hope you'll clarify for me which one it's supposed to be, thing in which I am going to get peanuts for the balance of my life. And my grandson, who at the time I'm being told this, was 16, and I'm saying this has always been his study nest egg. He's going to get paid the same kind of foolish money, $2 or something so, for the balance of his life. So how do we help one another?
Okay, let's
And
get an
can I get
answer
it
to your
clarified?
dilemma. Hold on a minute, please. Senhouse, are you taking this one?
Yes, I'll take this question. I think you will need to pull out your policy documents to assist us in identifying exactly what type of policy you have. But from what you said so far, it sounds like you may be holding an FPA policy. No, it sounds like you might be holding an FPA policy, which is indeed an annuity. And if that is the case, it will be treated to as outlined. Now, I have heard similar stories from other policyholders. Those stories predate ResLife. But I would think that an insurance company generally is not in the business of selling fixed deposits, which is a completely different instrument. So there must have been some issue through the sale process in terms of what you may have wanted to purchase and what you actually ended up purchasing. We will need to review our records, and I believe that may have been done in office already, but if you can pull out your policy contract, we will need to review the records and see exactly what your contract states. But I would want to make clear that we did not unilaterally change anybody's contract on transfer to Resolution Life. We would have made amendments to the existing terms of conditions, but we could not have taken a fixed deposit, which is pretty much impossible for us to have had, and changed it into a pension plan. That is not the case at all. As I said, there have been some issues like this. We will need to see what your particular circumstance is, but in any case, the policy that you have will fall into one of the categories that is there, and once we identify precisely which category it is, you will be afforded the settlement for that corresponding category.
Yes, ma'am. Thank you very much.
My name is Dion Kelman. I wanted to find out, with the liquidation of ResLife, is the system still taking out the APL and the interest on our policies? Which means I will be getting less money by the time you all start to pay me? What date will the interest or money taken out of the account would have been capped at?
Once the liquidation was announced in March, we would have frozen the policy values as at the end of that month. So we would have stopped accepting premium payments. We would have stopped the system from processing any further changes to the policies. So when you receive your communications from us, the value of pretty much all of the active policies will actually be the value as at the 31st of March. So you will not be penalized for anything that would have transpired thereafter.
Okay, and my last question is, did the government take into consideration, okay, I would have had money in BADMC. My money was almost maturing. Then I found out the government then made a change to put my money into bonds. Now you all are doing this again. So did they not take into consideration a survey to find out if you have money already in bonds to go put in a young person's money again? Well, I still consider myself young, but at the same time I have children. Then you put my money again in bonds again? It's just a little bit hurtful and unfair.
This has not been an easy exercise by any stretch of the imagination. And I do want everyone in this room, and certainly in the country, to appreciate that part of the way forward, and I think one of the things that I would like to see come out of this is a level of awareness for investment. And whilst that does not help with the current circumstance, I think that we have to be conscious of the conditions that we invest our monies. And I do not want you to think that there's an inherent problem with, one, either purchasing government securities or, in effect, purchasing any insurance product. I think as citizens, we have to be much more conscious in terms of what are the conditions, whether of the government or any state-owned enterprise or any private entity. And we are going to do our part with respect to the establishment of some financial literacy bureaus. But I think, as you said, you're a young person, and the reality is that economies only grow through investment. But we have to do so understanding that there will always be risk associated with investment. And in as much as the government has a responsibility to act responsibly, I would say, to make sure that when we issue debt, that we are managing our finances in a way that gives you confidence that the debt will be repaid as issued. And that means that we must hold each other accountable, and that is the only way I feel that we start to rebuild the trust in the system. But equally, as it relates to the private sector and private investment, there's always risk in investment. There's no way that we could ever eliminate totally the risk of investment. And it is unfortunate that we've had to come to this situation, but I want to give you and the country some assurance that this extended saga should not see or should not happen in Barbados again, because, ma'am, I'm saying the extended nature of the solution should not happen in this way, simply because we are putting in place a resolution management system, if you like, that will give clear instructions as to what needs to happen if and when an entity becomes insolvent, such that it doesn't take 10 years to come to a solution. And all I can say, ma'am, is that I'm very sorry that you've been placed in this circumstance.
Yes, ma'am.
Thank you. Good night, everyone. My interest is in the health policy. I have a health insurance policy, so my question is for Ms. Senhouse. You mentioned earlier in the presentation that insurance portfolio is going to be put through a bid process. And we also were told that premiums, you stop receiving premiums as of March 31st. So is there any more information that you can share with us about what happens in that intervening period? For those of us who have claims on a monthly or weekly basis, how do we proceed?
We've continued to accept claims in the intervening period, so you should not be disadvantaged while we go through the process of making the selection.
Thank you. And should there be any concerns that we would have in terms of the transition vis-a-vis pre-existing conditions and insurability, evidence of insurability, that kind of thing?
In going through that process, we will outline some preferred conditions to the interested parties, and we expect that their proposals should conform to those conditions that we would have outlined. We will want to ensure that there are no unnecessary limitations that preclude persons from being able to access coverage going forward. So we certainly will be looking to select a carrier that is willing to make it as easy as possible for persons to transfer their coverage so that you do not lose out in the process.
And finally, in terms of, should we be expected any adjustment to the premiums that we're now paying? Can you comment on that?
The new carrier will likely make a determination on the level of premium that they would expect for the coverage, but ultimately they will make the policyholders an offer, and it will be your decision if to accept the offer at the particular level of premium that they put forward.
Okay, thank you very much.
Thank you. Ma'am, on my left.
My question is one of clarity. I am not sure if I fall under insurance or annuity, because I work with a company and my pension was in the UK. It was brought into Barbados and placed with CLICO. A lump sum, and I would get statements telling me the interest and so on that had accumulated and what the total was. So I am not sure where does that fall on the pensions or on the annuity, and wherever it falls, what is the process for me? I'm not sure.
So based on what you have outlined, it sounds like you may now be holding an individual annuity policy.
Okay.
In that instance, you will fall into one of the two categories depending on the current maturity date compared to your age. So if
it was to mature when, well, I would to get pension when I'm 65. Quite a few years away from there.
So if you're more than 4 years away from 65, you will receive a bond only. If you are within 4 years of the maturity of that policy, you will receive cash. And if you are owed more than $20,000, the balance would be paid with a bond.
Okay.
So you'll need to look back at the maturity date of the policy compared to your age right now to help us make that determination.
Can you repeat that again? You said if it's less than 4 years.
Yes. How old are you now?
I'm 55.
And the policy matures?
At 65.
Okay. So it's definitely more than 4 years.
Right. So
to maturity.
I get a bond, but a bond of how much?
For the total of your fund value.
The total. So basically that might be what I put in.
Plus interest.
Plus interest.
Up to.
All right. So I get everything in a bond.
Yes.
All right. And you said 4 year that I can get cash. What?
No, you only
never.
Get a bond.
So I get to hold the bond for the 15 years?
So that bond that you will be getting starts to pay principal and interest within 3 months of issue.
Okay.
So you will start getting back lump sum payments within 3 months.
Okay. All right.
Thank you very much.
Thank you.
Yes, sir.
Good night.
Good night.
Two questions.
Yeah.
One is
name for
Leslie Padmore. I thought they had discontinued names. A lot of people were just standing. Leslie Padmore is the name. Are there any plans to recoup some of the assets of the former CLICO leaders? And secondly, can there be a consideration for the vast assets, Todd's, Henley, Wakefield, Easy Hall, those plantations that are the property of, well, CLICO/Resolution Life? Cannot some of those lands be used in settlement of some of these policies for some of the persons who will perhaps die and never be able to recoup anything? That's all.
Thank you. Is there a response?
Mr. Straughn wants me to answer that one. Let us be very frank. What was created was an insolvent company. A combination of bonds were issued along with the assets of CLICO being brought into the two companies, Resolution Life and New Life. Question is, are we going to sell them to recoup any of the expenditures that we have had to incur? The answer is yes. Such that the impact on the taxpayer, you all, so you all taxpayers, will be as minimum as possible. Because this is not an inexpensive venture, this is a very expensive venture. And therefore, what we need to do as a government and as a people is to ensure that there is intergenerational equity, both with respect to the current and the future taxpayers. The deal that was initially structured placed a lot of burden on future taxpayers to the extent that it created a situation of inequity and also created a situation in which those taxpayers would have been asked to carry a burden for which they would have had no part in the creation of the issue.
Okay, thank you. Yes, sir. On my left, the gentleman who is at the microphone now.
Yes. Right, Louis. My name is Louis Ford. I'm 89 years old, having lived my allotted life on earth. And when the saga first arose, I wrote to CLICO, and I have 3 letters on file stating that the assets, I must confess that the last speaker really stole my thunder because it's a question I intend to ask, but I have 3 letters. Each one stated that the assets in their possession far outdo the money which they have to pay out. So I will need some clarification that all the assets have been sold. I understand not. And that's one. The second one is, again, I've heard what you said about the having beneficiaries. When a person goes to take a policy out, he doesn't take it out for a beneficiary. There's something, a mortgage. In my case, it was sickness. My eyes. I wasn't thinking of a beneficiary. But I had signs that my eyes would give trouble. And I started an executive premium. I paid, and then eventually I had an operation, a surgery on my left eye, and I've lost vision in it. I'm fighting with the right eye now. Beneficiaries don't enter play. I want money to go to a hospital overseas. And I've got the approval of my ophthalmologist of a particular hospital I should go to. So saying I will get a bond or some kind of money for the next 10 years, I'll be 90 next year. It doesn't make, well, it doesn't sound very responsible to me. And as you said just now, we have a responsible government, and they will act responsibly. And I'm hoping that they will take account of my plight and let me get part of my $800,000 to go over the hospital.
Thank you very much, sir. Yes, ma'am.
Good night. My name is Linda K. Robinson. I just want some clarity on the eligible policies. It was said by Ms. Senhouse that the active policy is at 31st of March 2019. However, my policy was being paid through my salary, and the government stopped those payments at January 31st without my knowledge. So I just want to know if my policy, which was stopped at January 31st, is still considered an active policy.
Once your policy still has a cash value, despite the fact that we would not have received the premiums for the last 2 months, is what you're saying. Once there's still a fund value there, you will receive that fund value through the settlement process.
Okay, thank you.
Thank you. There are a couple of questions that we had via WhatsApp, and Geraldine Edwards is going to share those with us, or at least one of them.
Okay, good night to everyone. From our WhatsApp, we've got a question here. What happens if I misplace my policy document? What if my policy is tied to a mortgage? Thirdly, if the policy contract was submitted to CLICO before it matured, what do I do in this instance? And this one may seem simple, but the policyholder wants to know what really is a lapse policy.
Okay, thank you, Geraldine. On the first question, loss policies, or if you cannot at this time locate your policy document, you will need to come into us and make that declaration so that we can still go through the legal process that is required to confirm that the policy is indeed lost and no one has any knowledge of it, so that we can reissue the policy for these purposes. But there is a process that remains in place with regard to lost contracts. So I will encourage persons at this stage to locate your policy documents, and if you cannot, come into us. If you cannot locate the document, come into us and make the official declaration about that. We still need to adhere to those regulations in the process. If you have a policy that is assigned to a financial institution, because we are going through the liquidation process, it will still be treated to as outlined in the liquidation, and you may need to make alternative arrangements with your financial institution to secure your liabilities. And I think the final aspect of the question related to lapse policies. So basically, if like the young lady who asked the question before, you stop paying your premium for whatever reason, the policy starts to pay the premium payment from the fund value. If you allow it to continue doing that for a prolonged period, you will eventually get to the stage where your fund value is reduced to zero, and the policy will be considered lapsed. I take it that most persons are here because they're aware that their policy is indeed active, so that really should not be a significant issue for the bulk of persons here. But for persons who would have had issues with their premium payments while the policy was under ResLife, there were standard notifications that would have gone out to you to alert you to the fact that your policy was not being paid, or that the policy was in danger of lapsing in the near future, so that you had the opportunity to address that issue if you did not want the policy to lapse.
Yes, sir.
Good night. My name is Anthony. A question. You said there were 21,000 or so shareholders, policyholders. How much of those, what percentage of those surrendered their policies? A rough estimate will do.
The dollar value of surrenders in the overall solution may be about 10%.
Okay.
And that doesn't necessarily equate proportionately to the number of policyholders.
Fair enough. That's a good enough number to work with. Now, Mr. Straughn said that people need to be vigilant about their investments. So why would I continue to play a policy that I have no idea what's going to happen with it? So those people made a decision not to pay any further, which was wise, but yet they are penalized by having to receive bonds, 100%. I would think that having made a good decision and they're only 10% of the total value of the liability, that some portion of cash be made available to those who made a wise decision to surrender their policies. It is a reasonable supposition that having observed the economic environment and what was happening with CLICO, that people would have said, you know what, I am not putting sand, packing sand in a rat hole. I have no idea what's going to happen to this company, so I wrote to say I have surrendered the policy, acting in my own best interest as you had advised people to do going forward, and yet I am still penalized for that. I would suggest that you reconsider offering some cash to those who surrender their policies instead of 100% bond.
Thank you. Yes, sir. You were there before he came.
Okay. Good night. My name is Carrington Hines. I'm here representing my daughter who lives overseas. And she was here 2 weeks ago. And we went into Revolution Life. And they told us that the cash value is what they'll be paying. And when we look at the cash value and the amount of premiums that we paid to Revolution Life and CLICO over the period of time that the policy was in force, which is about 15 years, there's a disparity of about $13,000, $14,000. So which means we are going to get a cash value of about $9,000 while you pay a CLICO or about $22,000. This thing is not right. They should pay us what we pay in. Let us get back our money. My daughter had to work very hard for that. And therefore, I find it difficult to understand. And the Prime Minister said, this $20,000, and that's what was of particular interest to my daughter. What is this $20,000 all about? That you will get $20,000. And here she was looking forward to get her $20,000. Now it is about cash value. Cash value based on what? And I really like to get a clear answer, because as far as I'm concerned, it's either that the government should have made sure that Revolution Life succeeded and we carried on our investments down the road and back our money, or two, pay us what we put in. And therefore, we would achieve the objective what we were paying for all those months. I am very sorry, but I really cannot accept the situation as it is based on my feelings towards the insurance companies in Barbados right now. Thank you.
Thank you very much. Mr. Straughn or Senhouse, who's going to take that one? Anybody? It's more of a policy position.
No. I think the only way that I could possibly respond to the gentleman who, I suppose like all of you in this room, having waited 10 years to, having waited 10 years, and we have gone through the various permutations as to how this thing could be wound up with some reason, given the anxiety that all of you in this room would have experienced during that time. And I know oftentimes when, certainly once the Prime Minister announced that there will be a payment up to $20,000, that people will hold on to the number. And the reality is that we've tried to be as fair as we could be in the context of the government minimizing the exposure to taxpayer was trying to honor an agreement that was made to you by a previous administration. And this is not easy. And I can't, well, I'm not a CLICO policyholder. And no, I'm not a CLICO policyholder, but I know plenty of people who are. And it has caused a lot of stress to people and their families. And all we're trying to work through in this particular process is to bring some measure of relief to all of you. And the basis on which we've gone through in a fairly structured way in order to make sure that we can deliver a result that each and every one of you can hold dear and take to a financial institution. But having, and I think the slide was up earlier, and I think the young gentleman spoke to surrenders earlier. The reality is that no matter how we try to create the balance, there's going to be some angst, because in trying to create balance, somebody has to give and somebody has to take. And it is not easy, but we believe that this balance allows you to be paid, allows the taxpayers' exposure to be minimized, and for families to move forward and plan their affairs.
Okay, now we are only taking 3 more questions for the night. No, 3. You would have been the 4th. So now, we would also recommend, we're going to give you further information as to how you may contact ResLife to get any other matters clarified, because I'm sure that there are many other questions that you may have, and we won't be able to accommodate them all this evening, but thank you very much. Yes?
Yeah, hi, thank you, David. Mark Ford. I'm really on my feet in support of my father, who spoke earlier about his eyes. I believe that in his frustration, he turned away before anybody up there could respond. So is there anyone up there that would like to respond to that before I ask my next question in his support? He was talking about, if I may help you to recall, he was saying, well, he put an X amount of money not for beneficiaries, but for to help with his eyes, or I'm sure the other people would have put him for other things. But then he turned away, and there was no response. So,
sorry, sir. We have, in much the same way as we've had to deal with individuals with the debt restructuring, and it's very difficult for us to assess, and I don't mean any disrespect in any way, but to assess what is critical. And on a case-by-case basis, we've had to come up with a not straightforward process with trying to determine how we can give relief that will withstand the scrutiny, so that people don't say that the government giving preferential treatment to so and so and so and so. And it's been difficult because in trying to be open and transparent, there's always something that once you open a door, it creates a situation that becomes unmanageable with respect to government's finances and what we can and what we can't do. And we are operating in an environment where I can't say to you right now that until this entire solution is rolled out, I can't say to you right this minute that your father's circumstance can or can't be addressed, simply because I'm not in a position to do so. So I apologize if I apologize.
Not a problem. There are also persons from my moving around, including speaking to him, that believe that those who hold EFPAs, like he does, will be eligible for the $20,000. Is that so, yay or nay? No. Yes? No?
No.
No. Fine. So he waits, which of course it is unlikely he will. So there'll be no money until the end of 15 years.
No, that's not true.
No, that is not the
Well,
case.
that's a question.
No.
No.
We
Okay.
said principal
So just
and
for clarity,
principal and interest will be paid every quarter.
every quarter
Yeah.
for those who hold EFPAs.
Yes.
All right. Thank you very much. Good.
Yes, ma'am. Yes, sir. Let's come to. No. We're coming to you, sir, on my left. You were there before. You were there before her. It's your turn.
My name is Albert Phillips. I had to slip out of the room for a little while, so I don't know if this has been mentioned or what I'm asking now. I'm directing this to Mrs. Senhouse. This is in relation to pensions. I worked 48 years for a company here in Barbados, which was taken over by CLECO. Things were going smooth, pension-wise. All of a sudden, for 4 years, I never got any pension. Then Resolution Life came into the picture. I started to get some arrears. And then I think it's about a year or two ago, some 31st of July, I have all my documents, was stopped. And then the pension started. And now the pension is stopped. What I'm asking is the arrears going to be paid to me, because it's quite a bit of money, and or is this also going to be, I'm 74 years now, when your guys decide on what you're going to give me for the remainder of my pension, because I will stop paying in April, just a couple of days after my birthday, the ending, is both going to be, the arrears going to be joined into the pension, or am I going to be paid the arrears and have to wait on the pension, the lump sum?
We will consider the total amount that is owed to you and make the settlement based on that. However, as a pensioner, I believe you will be receiving the special Series B bond, which does pay interest and principal quarterly. So within 3 months of being issued with that bond, you will start to receive repayments of any amount that has been allocated as the bond payment.
He's going to get arrears? He did ask that question.
Yes, so we will
My
consider
arrears
the
would be
total
paid.
amount.
Yeah.
We'll consider the total amount, arrears plus your pension, pay up to 20,000 of that total, and the balance would be issued as a bond. But you will be issued with the type of bond that pays the interest and principal quarterly.
Okay, I'm very concerned because a little while ago, when they had all this bond issue, the central bank told me I got to wait till I'm 85 or so to get some monies that was owed to me. At 74, 85, what I want to be doing with money? I need money now, okay?
All right.
Yeah.
Point taken, but the bonds that we will be issuing to that category of policyholders has a specific structure, as I outlined. You will receive the quarterly interest and principal payments.
Yes, ma'am.
Thank you. One of my policies is a registered retirement pension. I left CLECO in 2010, and before the judicial manager was appointed, I received approval from the Commissioner of the Department of Inland Revenue to transfer my retired registered pension to another company into a registered retirement savings plan. I have correspondence saying that, and I always thought that once you had a document that was registered with the government, that the mere fact that it was a registered pension, and I have received approval from the Department of Inland Revenue, that that would be treated differently than how I am being told it is to be treated now. Can somebody shed some light on that for me, please?
So, getting the approval, and without seeing the document, getting the approval to transfer the plan is not the same as the actual transfer. I don't know how much time would have transpired with respect to
The approval was given in 2011.
Right, but the approval was given for you to do the transfer. Did you attempt to execute the transfer?
I couldn't because the judicial manager had
Hold on, sorry. You said the approval was given in 2011.
The approval was given in 2010. The letter is dated January 2011. Of course, you must appreciate that government takes very long to respond to things. So months had passed by, and by 2011, the judicial manager came and no more payments were being made. So I couldn't get my business executed.
But that's something that we have to take offline, because once the judicial manager would have taken control of the company, then it would have been difficult for any arrangements to be executed thereafter. So your timelines, that's why I was asking about the timelines and how and whether or not you had actually gotten the policy moved. So, but that's something that we have to look at. But on the basis of what you've said, I speak subject to correction, but I think it's difficult to say that there's any
Pardon me,
treatment.
you said what?
Sorry, I said it's difficult to assess whether or not there's any particular special treatment that can be meted out, because the Commissioner of Inland Revenue said that you could make the transfer of the policy.
So what would be the
You're
procedure?
correct, Minister. Just let me
You want to speak to the point?
reiterate that certainly under judicial management, it was not business as usual because the company was in distress. I don't think that your situation is unique. There are other persons who would have made similar requests, and because of the fact that the judicial management was in place, they could not be actioned. The terms and conditions under ResLife were such that you could not make lump sum withdrawals from your policy either. Ultimately, your policy will be assessed based on the type of plan that it is, and it will be treated in the appropriate manner through the liquidation process.
Can I ask one last question? You mentioned that you have to seek legal advice, and then thereafter the trustees would then inform the policyholders. How would we know who the trustees are to administer our policies? Because
the trustees for the institutional plans are named in the plan documents and contracts. That's how we know who the trustees are. So those are the persons, based on the documentation that we have received, that we understand we are required to communicate with.
But we don't have documentation. So we don't know who the trustees are. And before we leave this meeting this evening, I want some assurance, if somebody can give me some assurance, so that if I have to make a query after the 31st of August, that I can rightly know who the trustees are.
Noted, thank you. Sorry.
I was just saying that I want to add to what Dennis is saying, because if we're looking at CLICO, employees of CLICO, remember that we are no longer a company. We have changed into a new company, ResLife. So therefore, are the trustees still operational? Are they still in place? That is an important point. Are they still functioning as trustees? That is important. So who are the trustees for our company? Because the company is no more. I'm just asking. It's just a question.
CLICO currently still exists as a legal entity and remains in judicial management. Certainly for the CLICO plans, if we are unable to locate or identify the trustees, the next step is to go through the company. So we will follow all of the necessary steps and undertake the necessary due diligence to ensure that we are able to communicate appropriately with either the trustees, the company responsible for the plan, and through them, the plan members.
Well, we've been through quite a number of questions here tonight. Perhaps before we go any further, Ms. Senhouse, you could indicate how people may be able to ask further questions of the company. What steps do they take?
Sure. You can contact us at our contact center at the number 538-8088 or visit our offices where our client relations representatives will be able to assist you. In the intervening period before the communications go out, I would just want to remind persons to look for their policy documents to assist us. And if you are unable to find that document, you must make the necessary declarations to us. Look out for the communications. Ensure that you have all the documentation together so that when you do come into the office to receive the payment, that we can get through the process quickly and provide you with your settlement for your policies.
Okay.
So call our contact center or come into our offices.
I have one last question to, I suppose, cap the whole evening, and perhaps Minister Straughn, you may address this. Because over the years, I mean, there's been a lot of pain shared with us, not only here, but generally in the country over the CLICO debacle. And what we've had is a situation where there was a commission of inquiry in Trinidad which showed that CLICO had taken a lot of money from its subsidiaries. So the question which I believe many people would ask is, how is the structure within the region and within between the two countries, Barbados and Trinidad and Tobago, that CLICO could draw from subsidiaries like Barbados, but then when people are left without money from the subsidiary, it appears as though CLICO is so poised today that Lawrence Dupre is in a position soon to take control of CLICO again. But there is no capacity on the part of people who have been hurt by CLICO's dealings to get any money out of Trinidad. Is that something that has, from the Trinidad holding company? The question is, does that speak to an overall weakness within our system? Is it something that has been spoken of? Has it been addressed? Does it need to be addressed?
Well, basically, the fact that you have entities operating in multiple jurisdictions and our level of regulation needs to be synchronized to that fact. Now, we are currently reviewing the framework that would allow for the most effective regulatory process from a regional standpoint. And given what took place as it relates to CLICO, and it all stems from what essentially would have been the initial marching orders for the judicial manager here in Barbados. Because in order for the company in Barbados, and certainly to the extent of the Eastern Caribbean, as a child to the parent in Trinidad, if you wanted to continue those operations, then you need the support from the parent. And whilst monies were moved from the children to the parent, the reality is that in order for the operations in Barbados and as well as the Eastern Caribbean were there to continue in the way that the policyholders would have expected, then there ought to have been some effort to get support from Trinidad with respect to the operations of CLICO across the rest of the region. And so there is still some weakness in the system from the perspective of having a regional approach to regulation, a regional approach to the resolution of financial institutions who operate across the region. And the Prime Minister certainly is pushing to create the space within the region to be able to do that, because more and more we see a lot of mergers and acquisitions regionally, and not just within the insurance space, but within the banking space. And to the extent that as a region, we cannot assume that because everything is good in a particular place, that the rest of the region is immune. And so to the extent that there needs to be a stronger approach from a regional regulatory standpoint, is something that is unfortunate that it still hasn't moved forward, but we are very interested in making sure that from our own perspective that we, one, enhance the working relationships with respect to the regional regulators, but the ideal would be to have a regional regulator for financial services, because as we become more and more intertwined, then the intricacies of how you resolve financial institutions, I think is going to become more and more critical going forward, such that the interests of a Barbadian policyholder or a Trinidad policyholder or wherever, that governments don't seek to intervene to protect their own, but there's a solution that is brought from a regional perspective that is fair, because in a sense, Trinidad has broken for themselves and left us to be able to solve what essentially was their problem. And that's unfortunate, but the only way that I think we can move forward is to have a regional approach to supervision.
Thank you very much. And in summary, it sounds as though we're still vulnerable to some other company doing a similar thing until we get that regional approach. Closing comment from you, Ms. Senhouse.
The minister would have asked policyholders early on to kind of trust the process. We are under a strict mandate to have the process completed within a timeline that the Ministry of Finance has set and within the budget that they have set. We will reach out to policyholders as soon as possible to mobilize persons to come into us. And we encourage persons, when they do receive that communication, to come at the times designated to receive their payments. And we stand ready to go through the liquidation process with the policyholders and move on to the final wind-up of the company. Information from this meeting will be posted on our website as well as on our Facebook page, and hopefully through GIS as well, to assist policyholders in having the additional information to assess where they fall in the settlement process.
Well, I hope that this exercise has been useful. All the information that you have had is not necessarily the most palatable, but at least you have a greater sense of certainty as to what the direction is. And armed with this information, you are now in a much better position to determine what is your next best step. I want to thank you all on behalf of Resolution Life for coming out this evening in your large numbers to participate in this exercise. You have the numbers for further follow-up, and I sincerely hope that for the vast majority of you, you will be able to see better days and sleep a little easier coming out of some of this information, if not most of it. Let me also thank the panel, Ian Carrington,
Minister Straughn, Cheryl Senhouse, and Tony Hoyos for being here, and the staff of Resolution Life, as well as the staff of the Lloyd Erskine Sandiford Center, and all those who assisted in making this evening possible. Do get home safely.